Developing winning strategies. If you want to make money using financial spread betting, then you need a strategy. Without a carefully thought through strategy, you may as well be playing slot machines. It is your strategy that gives you an edge over the long term, and is that edge that will earn you money. Developing a winning strategy entails defining all aspects of how you will go about your financial spread betting. To do this, we need to look at the instruments and markets you will trade, how you will evaluate a potential spread bet, exactly how and when you will enter and exit the market. Your winning strategy also needs to examine how you size your individual spread bets. Let's take a look at each of these areas in turn. Instrument choice. From your one spread betting account, you will most likely have access to a wide variety of markets and instruments. The first part of your strategy should dictate what you are going to trade. If you have a strong attraction to a particular instrument and market, then follow your instinct. Most people tend to start with either indices or Forex, so try these if you are unsure where to begin. They say it's more profitable to become an expert at one instrument and market rather than becoming a jack of all trades. You will come to learn that each instrument and market has a character of its own. Familiarising yourself with the market you have chosen to trade will improve your chances of coming out ahead. Setup selection. Once you have chosen your markets and instruments, you need to decide what setups you are going to be using. Do you use technical analysis to look at support, resistance, and chart patterns? Are you just looking at an instrument that is trending strongly in order to buy or sell or pull back in that trend? Do you use indicators to help you discover profitable setups? What time frames will you use for your analysis? Entry timing. Once you know that you want to enter a new bet, how do you decide the exact moment to enter? Do you just enter at the start of the next day, or do you use an entry trigger to get in? If you are using an entry trigger, then where should you be placing that trigger? Once we are in a new position, are we going to actively manage it as time goes on? We will most likely want to limit our initial risk by placing a stop loss in the market. We may want to lock in some profits with a trailing stop if the position moves in our favour. We also need to decide whether we are going to have a profit target or just let the position run indefinitely. Position size. Your long-term survival as a financial spread bettor is the most important part of your strategy. How do you decide what your stake should be? You need to size your position so that it would take a very large number of failed trades to take you out of the game. With a decent strategy, the probability of getting 100 failed bets in a row are statistically minuscule. So, plan your position sizes so that you can withstand a bad run of this nature. In practice, this would mean that if you have a trading account of £10,000, each failed trade should lose no more than £100. You should know your stop loss position in the market before each trade, so you can use this coupled with your maximum financial loss per trade to calculate your position size. It's important to preserve your own capital. Keep optimising the different aspects of your strategy until you're happy that you have something that works for you. Without proper testing, you won't know whether your strategy is profitable. Practice with a very small stake size until you're confident that you do have an edge, and then stick to your plan. Developing your own winning strategy involves you deciding on each of these factors ahead of time. Formulate your spread betting plan and stick to it.